New analysis shows that Canadian real estate has given back about 43% of its inflation adjusted gains since 2010. So if you look at this chart, this is not saying that prices are down 43% from the peak in dollar terms. It's saying that if you adjust for inflation, almost half of the value growth that we saw over the last 15 years is totally gone. So you can think about it like this. Say someone bought a home in 2010 for $500,000, okay? At the peak of the market, in today's dollars, that home might have been worth the equivalent of $1.5 million in inflation adjusted terms, okay? Now that same home might be worth closer to 1.28 million in today's dollars. The inflation adjusted gain dropped from 1 million to about $780,000. About 43% of the real gain is gone. Now this data comes from the US Federal Reserve's database, which is called FRED, which tracks home prices in Canada after adjusting for inflation. Now this is a national measure, so it includes Toronto, Vancouver, Montreal, but also smaller markets across the country. Now, why is this important at all, right? Why should we care about it? Well, inflation changes how we look at price growth. If your home price went up 5% a year, but inflation was actually 3 or 4% a year over that same period, your real return is actually much smaller than it looks at first glance. This chart shows that in real terms, prices are roughly back to where we are in 2017, at 2017 levels. That means in terms of buying power, we've actually seen 8 years of no net growth in home prices. Now, some people see this as the market's finally cooling off, of course, after a decade of wild growth, while others are seeing as a warning sign of a lot more to come. Let's say more price declines, more inflation. Now, of course, affordability hasn't improved as much as you'd think, right? Interest rates are much higher than they were in 2017. Property taxes have also risen since 2017. We also have maintenance costs, insurance, utilities, all the things that you have to pay for on a normal basis when you own real estate have all gone up. So even though this inflation adjusted chart shows that we're back to 2017 levels, the monthly cost of owning is often much higher today. Now, wages are another piece of the puzzle, right? Average incomes have barely grown. We can all really see that, and it's very obvious to notice. So since 2010, for most Canadians, affordability remains very impossible. Now, some people are looking at this as even a better buying opportunity, especially for those who believe interest rates will drop and that prices will go up from here. I'm not saying that that's what I think. While some argue that, okay, without a drop in interest rates or a significant rise in wages or people's incomes, prices could continue stagnating or go further down in real terms. So bottom line, this correction is real. And when we look at this inflation information, it seems like we are even further down than what we thought when you just look at a normal price chart. When you look at inflation adjusted numbers, we are at 2017 levels right now. Now, what matters now is how interest rates, wages, and economic growth play out over the next couple of years. And that's what I will be looking at and showcasing to you guys. And I do think that bottom line, it's really interesting to see that when inflation is high, it really erodes the growth of even investment assets like real estate, like stocks. When you have high inflation, that just makes it makes our money just worth less and less. And we can see that, we can feel it, that the Canadian dollar has lost so much value, especially over the last 10 years. I graduated university 2015. Since I graduated to now, I can easily tell how much a dollar goes compared to 10 years ago. It goes nowhere near as far as 2015 as in 2025. It is just so clear to me that inflation has played a massive part in our economy in terms of our growth and everything else, but it has definitely pushed asset prices up, and it's made saving money almost pointless, in my opinion. So let me know what you guys think.